We're recording this on Monday, November 17th, which time-wise isn't ideal because you know what happens on Wednesday. NVIDIA reports. And I guess the whole world will be watching that as usual. Uh, in one sense, I don't know if you agree with me, I cannot see a world in which their, actual numbers that they report are anything but, absolutely out of the world because of all the other companies that have already reported, right? Plus the increase in spend. Maybe the thing that will be terrifying is the guidance. But again, I don't think it's mathematically possible, right? For AWS and Google and Microsoft to have said we're spending more than ever and we're going to continue spending more than ever. And then NVIDIA comes out and says, sorry, our numbers ain't too great. So I mention that only because I'm trying to stay grounded in a kind of mathematical reality. To get to your question, what am I doing in preparing for a potential bubble? I think so far I've kind of done not that much because the majority of my investments, as seen in the King of the Jungle, is all these plays. I have EOS, which is now looking like incredibly important and central to all of these AI data centers power build outs. So that I haven't touched that. My iron position is still very high. I added to Cypher because of the recent drops. So I'm trying to take advantage of this volatility, saying I think this is a passing moment of fear. And everything else I've kind of stayed the same, just cutting some of the lower tier players. So I have not yet made any moves in terms of risk off. I'm kind of betting the other way at the moment.
Okay, that's cool. Yeah, like I hope that works out. I've not made any big changes. Like I've certainly not done like a Peter Thiel or a Barry or a SoftBank and like got completely out of like major positions. But I have nudged my own portfolio around a little bit. And so I have got more risk off. But then you and I are in like different stages as investors. Like I live on my portfolio, right? If it's I can't live on the Patreon earnings just yet. So I got the bills to pay. So yeah, so I've nudged my cash allocation up from about 17 and a bit percent to over 21% with a couple of trades I've made in the last 2 weeks. Should I give you a quick whirlwind tour of what I've done?
Say that last bit again, Badge.
Oh, sorry. Should I give you a quick walkthrough of what I've done?
Oh yeah, absolutely.
Yeah. So a bunch of stuff. Like I tweet about this stuff. So go check out like my ex at 7Luke Hallard, and you see like a nice thread of every month, every mid-month, I give like an update on what I own and the changes I made in the portfolio. Maybe staying with the theme of like the hyperscalers and the big tech stuff. Like I only just added to my Alphabet position back in May, but even that add has like doubled. Like the value of my Alphabet position has doubled in the last 6 months because I think the market is now waking up to some of the stuff I was saying, well, years ago. But I have trimmed my Alphabet position, but it's not because I don't believe in the future of the company. I just have too much exposure to it. So I've trimmed that down to about a 10% allocation. I said I wasn't going to trim Palantir again, but I have trimmed it again. So now it's a 1% position. I could live on that. If it just keeps doubling and I keep like cutting it in half, we can just do that for like 10 years. That pays the bills. I sold a bunch of stuff though. So I was trying to raise cash and I've been looking for like easy places to do that. And maybe like linking back to something I said at the top of today's discussion, there's like, there are a couple of companies I'm just not tracking effectively in my own portfolio. One was United Health. That's out. But one that probably ties into this conversation is ASML, the guys that make the machines that make the semiconductors. I haven't sold it because I don't believe in ASML, or because I'm a bear on AI. Frankly, I'm just not tracking the company effectively. Like I know I'm not doing like the bare minimum in my mind, which is enthusiastically and excitedly reading the quarterly report, listening to the quarterly earnings call, and then occasionally doing like an industry read across. I'm not doing that for ASML.
So why
So
not? Why not Batch? Why? Because it's a fascinating company.
yeah, yeah, it is. It is, but like the stuff it's doing doesn't excite me. Like I know like the stuff it's doing enables stuff that excites me. So I'm
Mhm.
excited by, what Tesla are doing and what Nvidia are doing with the machines that ASML helped them build. But maybe ASML, I'm just finding it's just like one step removed that I'm just not like, eagerly like a geek reading on my favorite like tech blogs and websites about like the latest generation of hardware and what it can do because it's sort of somewhere back in the supply chain. It's like I wouldn't be interested in the guys that are actually like mining the raw materials. That doesn't interest me at all. But like, it's incredibly important still. I did one other change as well. I sold Snowflake, which I've owned for a couple of years. Kind of the same reason, like I'm not tracking it well, but I do actually have a foundational reason why I've exited this one. It's been on my like to-do list to sell for some time. Like if AI plays out the way I see it playing out, I just don't think we're going to need tools like the Snowflake data cloud. Like we just
Hmm.
need sources of record. Companies will just need, somewhere where they have, I don't know, a list of all their employees and their national insurance numbers or, their social security numbers and like date of hiring and various other information. And if you have all that information in like a structured sub thing somewhere, like a source of record, you'll then use AI to do fancy reporting, draw inferences and analytics and like correlate random bits of data and come up with like business ideas. You don't really need like data warehousing and some of the stuff that Snowflake does. Plus, the real AI guys seem to be leaning more on Databricks, which is a private company, which is on my shopping list. So if I can buy Databricks, I will. But I just don't feel like I should own Snowflake right now.
Yeah, curious. I had a little more bullish take on Snowflake, but I had studied it pretty intensely some while back. And then, though simultaneously, it became too complex to remain expert level enough to keep following it. I worry about any software that, has AI at its center, as you heard me say many times. So I think all things being equal, that's a pretty fair position to cut from your end for the reasons you gave. No, no, you won't hear me screeching at you for that one.
I did buy a couple of things. I bought Mercado Libre. I think I talked about that a little while ago. And you and I talked about Uber last week. I've actually now bought that twice already because I wanted it in two different portfolios. So I'm not just selling, I'm buying a little bit, but kind of bringing it back to where we started, like net, I'm increasing my cash allocation and I'm probably still going to take like another percent or two out of Rocket Lab at some point. I'm just trying to hold off doing that for now.
Yeah, I mean it's huge. It's a huge position for you. So yeah, that sounds wise.
So Christoph is risk on, Luke is going slightly more risk off. But maybe something to read into this is like neither of us are making, well, I don't want to speak for you. I'm certainly not making like massive fundamental changes in the nature of my portfolio. I'm just like nudging things in a certain direction to match my kind of conviction and my thoughts about the medium term.
Right. And I'm trying to, it feels like what I'm trying to do is I'm sensing that this moment is one of these manufactured fear moments intended to scare people out, where whereas the long-term trend and momentum is going to continue to be up and into the AI sector. And so I'm continuing to back and add to my positions in the AI dominated space, the batteries, the data centers, the call it the makers of the plumbing like Astera Labs. And I'm guessing that I don't know, a month from now, those things will actually be higher than they are now. So because the AI train ain't stopping. I think that's yeah.
And like we did the King of the Jungle review last week, and you soundly like trounced me with your 380% return. Like, if the AI bubble doesn't burst, you are absolutely going to win, like, year 3. Well, notwithstanding what our Patreons do with their community portfolio decisions. But yeah, you're gonna beat me because you're much more risk on with your portfolio and have much more exposure to some of these themes. But I think in like a normal year, when things aren't going crazy, I feel like my portfolio is better positioned.
Yeah, let's see. Let's see how this shakes out. One of the things that you saw me doing maybe over the last month or two is I opened up a position in PayPal, and I'm kind of using that to think of as a bucket into which, when I'm ready to sell some of the AI stuff, a lot of bananas are going to flow into that because it's hugely undervalued. And my thesis is that there's already lots of signs that the growth is returning and so forth, and it's completely unrelated to AI. So I have this space for to catch all the bananas that are out of the bubble, the AI bubble stuff, and that's how I'm thinking of beating Badger for round 3, is that I'll either the AI stuff continues, like you said, that would position me to have the better returns, or, and this is more of a timing thing, that I'll sniff out the bubble if it's popping quick enough, let's say, and reallocate those sources to a position I'm ready to become much bigger. So let's see what happens.
Like, these are times, I think I've said this in recent discussions, like when valuations are like they are right now, and when volatility is like significantly higher than historical volatility, which is right now, these are the times when you want to keep a steely eye on your portfolio and like a firm grip. So I'm using tools like Fiscal.ai, like daily, just to look at my portfolio, look at the valuations of the companies I'm in, certainly to be like checking in as they're reporting. As you say, Wednesday, a big day coming up with NVIDIA, because you need to be reactive, or you could, not reactive, that's the thing you don't want to do. You need to be prepared, and you want to be able to respond if like finances start telling you that the game may have changed.
Exactly. No. I mean, that's a decent investing principle. Just be prepared and try to take advantage of things. I made a X post. It wasn't, I didn't spend too long on it, but it seemed obvious. And sometimes the obvious needs to be repeated, which is that people confuse price and value. And when things are going down, they start panicking. But when the value remains obvious, then when the price goes down, you're getting value. I mean, you're buying a company at a better value. And that volatility in that way is your friend. This is what so many people don't get, right? Because they only focus on price. But when you could see clearly that the value of your company has just increased, right? Because, say, EOS, just to use my old, my battering ram, when there's no world that I know of where they will not sell all the batteries, that's becoming more and more clear, where they're saying we're ready to scale our lines more and more quickly, and simultaneously the price drops, last week 40% or something. My guess is due to market manipulation shenanigans. Then that's not a moment to be fearful. That's a moment to say, oh yeah, 3 years from now, the me of 3 years from now is going to be really proud of the me of today that was able to see that so clearly. And unless, right, a black swan thing happens in which all of a sudden the US grid explodes and AI drops dead in its tracks and China takes over. So, okay, well, then we have other problems then.
Sure. Cool.